It's already Tuesday. Over in the United States of America, first chart up on the website. The link's below, YouTube people. John Galt FLA, which I presume is standing for Florida, but this chart is representing the weekly percentage change in unadjusted purchase applications per the MBA, year over year, MBA Mortgage Bankers Association. Lots of people going to the bank and saying, I'd like a mortgage, and the bank is saying, yes, you can have a mortgage. Tick all the right boxes, it gets on this chart. So how are we doing? For a little while this year, 2010, it was positive year on year compared to last year. Last year wasn't a terrific year, but for the rest of the year it's all been negative, and for the last 6 months it's been negative at about 30% negative. Making mortgages makes a lot of money into the economy. New money from nowhere into the economy. This is all money that is not going into the economy. This is deflationary forces, baby. The Telegraph co.uk gives us Lehman profit. That profit as in, anyway, you'll understand, fears second crisis if US interest rates are kept low. America is storing up a second financial crisis by keeping interest rates at record low levels, according to David Einhorn, the prophet, the hedge fund manager who first publicly warned about the financial catastrophe facing Lehman Brothers and many other things. He seems a bright little bunny. This one line sums it up quite nicely. If interest rates ever do go up again, you will have another crisis. It's so short and succinct and to the point that we'll repeat it. If interest rates ever do go up again, you will have another crisis. Yeah. Wall Street Journal Metropolis gives us New Jersey pension gap hits $54 billion. New Jersey pension gap grew to $53.9 billion in the last fiscal year, up from $45.8 billion, thanks to market losses and a lack of state funding, according to the figures released on Thursday. $45.8 billion, now up to $53.9 billion deficit. They haven't had a very good year. What on earth have they been doing with their money? The stock market has been slowly going up. Bond prices have slowly been going up. Where have they been losing money? And the more important fact of all this, a deficit of 53.9 billion on their books, that is a projection. And the projection is based on the fact that they will get 8.5% per annum interest on their fund. That's the profit they'll make on the fund in the year and put it in. But obviously they're obviously not making that 8.5. They're obviously losing more below. They're not making the 8.5, and the projection for how the fund is going to pay out in the future is based on making that 8.5 year after year after year. If I were them, I'd just admit defeat, steal the money that you've got in the fund and sod off to a sunny island somewhere. Only practical thing to do. Dawn.com. US excess liquidity pushes oil to record high. This is from Saeed Rashid Hussein in Riyadh, Saudi Arabia. As the year comes to a close, another round of crude price spirals seems just around the corner. Markets are already at their highest level in 25 months, despite the fact that the world is barely out of the Great Recession. The jobless rate today is hovering around 10%, twice the levels in 2007-8. The housing sector in the US continues to languish in the intensive care, with existing home sales down 27.9% year on year in November, and a lackluster global macroeconomic performance. And this leads to the question, given ample supplies of crude oil, considerable spare capacity. How could crude be at this level? How could it possibly? It's a mystery, really is a mystery, isn't it? Move on to the Arab Times. Iraq, Cairo. Cairo isn't in Iraq, but we'll move on anyway. December the 25th. The Arab people weren't having Christmas Day. Does Christmas Day exist? Hard to say. The global economy can withstand an oil price of $100 a barrel, Kuwait's oil minister said on Saturday, as other exporters indicated global production was unlikely to rise in 2011 because the market was well supplied. The market can stand $100 a barrel, in other words, another 10% rise from where we are now. But why is it going to go up if the market is well supplied? It's a mystery, isn't it? It really is a mystery. Jim at the Burning Platform gives us, yippee, we broke $90. That's $90 a barrel for crude oil, but it's well contained. He's been a bit angry lately, Jim. Oil broke through $90 a barrel this morning, approaching a 3-year high. More good news for the economy. Not. I hate to beat a dead horse or senior citizen that starved to death, but didn't Ben Bernanke just go on 60 Minutes last week and make the following declaration? Well, this fear of inflation, I think it's well overstated. We've looked at very carefully, and we've analysed it every which way. We've been very clear that we will not allow inflation to rise above 2%. Yeah, Ben. And Jim goes and puts us some charts up. The oil chart, which is up 9%. These are all month-over-month charts going back 1 month. Oil is up 9%. Heating oil is up 10%. Unleaded gas is up 10%. Copper is up 13%. Corn is up 14%. Soybeans up 9%. Wheat up 20%. Lean hogs, if that's your thing, up 12%. Cocoa up 10.7%. Coffee up 17%. Cotton up 33%, sugar up 22%. All those charts on the website. Link below to overthepeak.com for the YouTube people who are a bit slow. Germany and its automakers getting crushed as Chinese rate hike fear spreads. Now, Christmas Day again, the Chinese were putting their interest rates up on Christmas Day. Can you imagine? What a thing to do. And the article says China's rate hike problems are spreading across the globe this morning, with European indices hit by the move. UK markets are closed for the holiday. But what we had was Volkswagen was down 4.6%, Daimler was down 4.2%, BMW down 4.9%, and Porsche down 5.46%. It's a tangled web, this economic weave. What happens in China can affect German car manufacturing greatly. It's a very big, interlaced, complicated picture, which I repeat, nobody understands. There's lots of things we don't understand, aren't there? Bye.